With the 2008 hurricane season coming to an end, the devastation left behind brings new life to an old debate on federally funded aid for catastrophes. In these interviews with Insurance Journal's Ken St. Onge, regulators attending the National Association of Insurance Commissioners in National Harbor, Maryland, talk about how they feel a national catastrophe plan would affect their state.
We've really moved a long way from when I first started to testify before the Congress, when I felt like I was the lone voice out there talking about a national catastrophe plan. So it's great now that we have travelers and we have Nationwide, among others, that are talking about a continuum of plans.
I welcome and urge the federal government to get into the business of assisting companies in providing that coverage, whether that's to allow tax-free reserving for cat losses, a single policy to include flood, earthquake, and wind, and terrorism, modeled after what they did post 9/11 in creating a Terrorism Reinsurance Act, or CAT fund, if you will, or the State Farm Allstate proposal. The first thing I ask them to do is not to use that as an excuse to deregulate and remove jurisdiction from the states that allows us to protect consumers. And we really do that very well, not just in Louisiana, but all across the country.
What I say to people in Pennsylvania is the Pennsylvania population will be ardently opposed to a national catastrophe program up and until the day there's a big catastrophe here, and then we'll all be for it. That's just the way it works politically. So there's not a big call for that kind of program in Pennsylvania, but we watch the debate carefully, and again, I think there's some arguments that can be made. Certainly we were in favor of the terrorism insurance bills after 9/11 when we saw what kind of potential there was for a major terrorist. Thank God we haven't had one, but what potential there was for that, I think we needed terrorism insurance, and similar arguments can be made for some kind of catastrophe program.
Well, you know, every state in our country is exposed to some natural catastrophe. And Arizona is no different with the wildfire exposure that we have. As you say, we've been very fortunate. The last fire was back in 2003, and that destroyed over 300 homes in Arizona. So, you know, the consumers that lived in those fire-prone areas are very, very cognizant of what their exposures are. And we publish, the department publish notice of wildfire season. We encourage the consumers to prepare a defensible area around their home and take whatever steps they can to protect from those types of losses. But I do support a program of a national catastrophe plan to help do some pre-event funding and planning for those types of catastrophes.
We don't want our policyholders in Wisconsin having to pay for the decisions of local governments allowing people to build on the coasts of Florida or Louisiana or eastern or western seaboard. So I think we're very concerned about the idea of a CAT fund, pooling nationally for a CAT fund, and continue really as a Midwest, all the Midwest states continue to push our concerns in relation to that, especially with our congressmen and senators.
I am not a supporter of either state or federal intervention into the business of insurance. I do see a limited role for the federal government in a backstop facility. I don't believe in state-sponsored CAT funds per se, because I don't think natural catastrophe events can distinguish where the border of Connecticut or New York or the border of Connecticut and Rhode Island is. That's just not the way disasters occur. So I think it's impractical and imprudent to look at it at a state level. I do think that at a national level, there is a role for the Fed to play, much like what occurs in the structure known as TRIA. But I haven't really settled on what the thresholds and triggers would be. Certainly it'd have to be something of a high, multi-billion-dollar, very significant event.